Imagine this scenario playing out.
Yeah.
You check the news, see a major tech company has just released its latest earnings, and every number looks fantastic.
Right.
They crushed forecasts, reported solid growth, and then the stock drops. What
Yeah.
gives? It's a paradox that leaves a lot of investors just scratching their heads.
It happens more often than you'd think.
Welcome to the Deep Dive. Today we're plunging into the fascinating world of PayPal to really unpack this very puzzle. Our mission is to dissect their Q2 2025 earnings call, dig into their financials, see what top analysts are truly saying, and uncover the company's ambitious strategic plans for the future.
Yeah, there's a lot going on there.
We've pulled from a stack of incredible sources for this deep dive, including recent earnings call transcripts, detailed financial presentations, and sharp analysis from leading outlets like Investing.com, MarketBeat, Simply Walcent, and A-Invest. So let's get into it.
It's a compelling situation because it really illustrates that often complex dance between a company's fundamental performance and, well, the market's ever-evolving expectations. The numbers alone rarely tell the whole story.
Absolutely. So let's start with those numbers because on the surface, they were, well, undeniably strong. PayPal's Q2 2025 results easily surpassed analyst expectations on both earnings and revenue. That marks their sixth consecutive quarter of profitable growth.
Pretty impressive streak.
Yeah. We're talking about an earnings per share, or EPS, of $1.40. That significantly beat the forecast of $1.30.
A 7.69% surprise there.
And revenue hit $8.3 billion, well above estimates of $8.08 billion.
Right, another beat about 2.7% higher. And if you look beyond just those headlines, their core financial metrics, they really confirm this fundamental health. Total payment volume, or TPV, that's basically the total value of all transactions processed, hit a staggering $444 billion.
Wow.
Yeah, showing solid growth. Transaction revenue was up 4%, and their non-GAAP operating income, which, gives us a clearer picture of their core business profitability, grew a robust 13% to over $1.6 billion.
Okay.
Investing Pro even gives PayPal a good financial health score, which kind of reinforces this stability.
And it's not just looking back, is it? They've actually raised their full-year guidance for both transaction margin dollars and non-GAAP EPS.
That's right.
That signals pretty strong confidence from management, doesn't it? Especially with an anticipated $6 to $7 billion in free cash flow and a commitment to $6 billion in share buybacks.
Precisely. That's a significant return to shareholders, and it definitely indicates a belief in their underlying value.
So here's the real puzzle we're here to solve, though. If the numbers were so good, if they're beating expectations and raising guidance, why did PayPal's stock actually fall? Like 6.67% in pre-market trading immediately after the announcement.
That's where it gets truly interesting, yeah. The stock dropped from a close of $78.22 down to $71.57. It's almost as if the market, already had the good news baked in or maybe was looking for something more.
Okay.
Analysts suggested this decline might reflect broader market trends, sure, but critically also investor concerns about future growth prospects.
Oh, okay. Future growth.
Exactly. For a mature fintech like PayPal, even stellar Q2 results might not impress a market that's now looking past just transaction volume to radical new growth vectors. Or perhaps, for a clearer, faster path to profitability in some of those newer areas like crypto or AI, which are still kind of big bets for them.
Right. So it's not just that the numbers were good. It's whether they were good enough to satisfy an, let's say, insatiable market looking for hypergrowth. MarketBeat noted that despite the positive earnings, the stock fell another 2.8% on a specific trading day, even on significantly lower trading volume. So this wasn't just a pre-market blip.
It certainly wasn't. And the mixed analyst ratings, they tell a similar story. You've got a consensus hold rating, right, with an average price target of $85. But that average, it comes from a really wide range, 2 sell ratings, 14 hold and 18 buy.
Wow, quite a spread.
It perfectly illustrates the division in how the street views the company right now. It suggests that while the fundamentals are strong, there's a strong desire for maybe clarity on the path forward.
Okay, let's unpack this then. If the market is a bit skeptical, how is PayPal's leadership responding? CEO Alex Chriss stated that FinTech is in its infancy, and we believe the next 5 years are likely to see more change in how people shop than the last 2 decades combined.
That's a bold statement.
It really is. So what does this all mean for PayPal's strategic transformation? What's their answer to the market's skepticism?
Well, he laid out 4 key strategic growth drivers. And they show they're really trying to move beyond just being a payments processor to building a broader commerce platform. It's their attempt, really, to redefine their value proposition for the future.
Okay. So their first big bet is on winning checkout and branded experiences. What are they actually doing to, truly own that customer interaction?
They're heavily focused on improving their branded checkout experiences. A significant portion of their global transactions, like over 60% in the US, are now on their latest platform. And these upgrades, they say, are leading to real conversion rate improvements for merchants. They're being systematically rolled out in the US, Germany, the UK. What's also kind of fascinating is how customers who adopt their card products, like the PayPal credit card, they actually transact more frequently and deliver higher average revenue per account.
Interesting. And I noticed in the Q&A transcript that external factors like tariffs actually slightly offset branded online checkout TPV growth.
Ah,
Without that pressure, they said branded checkout growth would have been 6%. That's a subtle but important detail, right? Shows
yeah.
the nuanced challenges they face.
Absolutely. Good catch. Okay, moving to the second driver, scaling Omni and growing Venmo. This is where we see some really impressive growth figures, especially for their buy now, pay later, or BNPL services.
Right, BNPL. That volume was up over 20%, wasn't it? And monthly active accounts climbed 18%.
Yep.
And for merchants, the average order values are more than 80% higher when consumers use BNPL compared to traditional payment methods. That's a powerful incentive for businesses to offer it.
It really is. And PayPal seems to be winning in BNPL because of its sheer scale, its ease of use, and its broad distribution. They're offering it in 9 global markets now, with plans to expand. The Ace hardware example they gave really shows the impact. After adopting PayPal BNPL, Ace saw a 35% increase in total PayPal sales, and get this, 7-fold increase in average order values.
7-fold.
Yeah, it's a potential game changer for merchant conversion.
And then there's Venmo. For a while, people sort of questioned his trajectory, didn't they? But the CEO's answer was a resounding yes to its growth potential.
Definitely.
Its revenue grew over 20%, the highest since 2023, apparently. And TPV grew 12%, highest in 3 years.
That momentum, it comes from a deliberate shift. They're moving it from just a peer-to-peer app to an everyday commerce platform that's happening through product innovations and marketing. Their Big 12 and Big 10 college distribution deals are actually a pretty clever move.
How so?
They allow student athletes to receive revenue share payments directly via PayPal or Venmo, and it also enables spending on campus. Think bookstores, tickets. It embeds Venmo deeper into a really key demographic.
So,
And pay with Venmo TPV, up more than 45%. Monthly active accounts increased by 25%, and you're seeing major brands like Sephora, KFC, Taco Bell, Pizza Hut adding it as a payment option.
that's a significant expansion beyond just, splitting dinner bills.
Mm.
And I saw their Venmo debit card monthly active accounts were up more than 40%.
Yeah, and overall debit card TPV across both PayPal and Venmo grew more than 60%. It really highlights how they're extending their reach into daily spending.
Okay, so the third strategic driver.
That's driving PST profitability, particularly with Braintree and their SMBs, small and medium businesses. PayPal previously focused on sort of resetting its largest merchant relationships to price services based on value. That initially put some pressure on growth.
Right, I remember that. And now it seems its strategy is starting to pay off.
Looks like it.
The CEO noted that Braintree TPZ is now past the peak pressure from renegotiating and shedding unprofitable volume, meaning they were strategically getting rid of business that cost more than it brought in.
Exactly. Disciplined approach.
And it's expected to accelerate in the second half of the year.
That's a crucial turnaround. And they're investing heavily in value-added services like payouts, specifically Hyperwallet, which is proving really important for those college athletic partnerships we just talked about. Connects back. Yeah. And for SMBs, over half of their volume now flows through PayPal Complete Payments, or PBCP. That's expanded to Singapore now, and they've strengthened their partnership with Wix to seamlessly integrate their full suite of payment tools for those website builders.
Okay, that brings us to the fourth strategic driver. Scaling next-gen growth vectors.
Yeah.
These sound like PayPal's big bets on the future AI, ads, crypto. Seems like they're really trying to push the envelope here.
This is definitely where PayPal is looking ahead, thinking about how payments integrate into the future of commerce. In AI, they're pursuing something they call agentic commerce.
Agentic commerce. What's that?
Well, the vision is basically AI interfaces handling the entire shopping process for you, from
Yeah.
searching for products to completing checkout, tracking purchases, all directly within the AI chat or interface.
Huh. Interesting.
Yeah, and they're partnering with major AI players like Perplexity, Anthropic, and Salesforce to try and make this a reality.
And on the ads front, they've launched off-site ads and storefront ads.
Right. These combine seamless in-ad checkout with PayPal's, vast data insights to personalize shopping experiences. They're already expanding these internationally into Germany and the UK. It's a pretty smart way to leverage the data they have.
Makes sense. Then there's crypto.
Yep. Their stablecoin, PYUSD, basically a digital dollar pegged to the US dollar, aims to address things like high fees and slow speeds in cross-border transfers. It's expanding availability on the Stellar and Arbitrum blockchains, and is being integrated through collaborations with big names like Coinbase, Fiserv, and MasterCard. And most recently, they announced Pay with Crypto, powered by PayPal. This basically enables instant crypto to stablecoin or fiat currency conversion for over 100 cryptocurrencies in popular wallets like Coinbase and MetaMask. It removes a lot of the friction from actually using crypto for purchases.
Right, making it more practical. And finally, what Chris called a game changer, PayPal World. This aims to tackle the currently fragmented global digital wallet system, right?
Indeed. PayPal World's vision is ambitious. It's to connect 5 of the largest digital wallets, PayPal, Venmo, Mercado Pago, TenPay Global, and UPI, all onto one seamless global platform.
Wow, that's huge.
It is. This move expands PayPal's connections way beyond its existing 400 million customers to potentially more than 2 billion consumers worldwide.
2 billion.
That's the potential reach, yeah. Facilitating global commerce and person-to-person, or P2P, transactions on a much bigger scale. It's expected to go live starting this fall, beginning with connecting partner wallets to PayPal and Venmo. It's a huge move toward global interoperability.
So with all this ambitious transformation happening, how healthy is the company financially, fundamentally? And how is it currently being viewed by the market from, say, a valuation perspective?
Well, Simply Walson gives PayPal that good financial health score we mentioned, checking 5 out of 6 key criteria. They have a pretty healthy balance sheet. Total shareholder equity is $20.2 billion. Total debt, $11.5 billion.
Yeah.
Their short-term liquidity also looks very strong. Nearly $60 billion in short-term assets, easily exceeding both their short-term and long-term liabilities. So fundamentally sound there.
That sounds solid. But I did notice a bit of a head-scratcher when it came to interest coverage in some of the reports.
You're right to pick up on that. It's a bit confusing. Simply Walson indicates PayPal's EBIT, that's earnings before interest and taxes, of $6 billion results in an interest coverage ratio of negative 31.7.
Which sounds bad.
It does sound counterintuitive, yeah. However, the same source clarifies that PayPal actually earns more interest than it pays, so coverage of interest payments is not a concern. It's likely a unique accounting nuance for financial companies like them. It suggests the negative number isn't really indicative of a risk in this specific case.
Got it. And what about its valuation? How does it stack up in the market compared to its peers?
PayPal currently trades at a forward PE, that's price to earnings, ratio of about 18x. Now, this is notably below its own 5-year average, which was closer to 22x.
Right.
And it's also lower than competitors like Square and Adyen. So this does suggest it might indeed be undervalued by the market at its current price, especially when you consider all those strategic shifts we've just discussed.
So if we contrast it with a titan like Apple, for example, what does that tell us about potential upside?
It's an interesting comparison. Apple obviously boasts higher net margins, right?
Sure.
24.3% versus PayPal's 14.5%, roughly, and a significantly higher return on equity.
Right.
However, PayPal is trading at a much lower PE ratio, about 14.5, compared to Apple's 34.3. Now, what's particularly compelling, maybe for you listening, is that analysts believe PayPal has significantly higher probable upside. Yeah, they estimate about 25.25% upside to its target price, whereas Apple's is estimated at a much smaller 5.03%. This suggests analysts see more room for growth, more potential gain from PayPal's current stock level.
That higher potential upside for PayPal is certainly compelling food for thought. And in terms of ownership, who actually holds the shares? Is it mostly institutions?
Yeah, institutional investors hold a substantial chunk, about 68.32% of PayPal's stock. Insiders, like executives and board members, own a relatively small 0.08%. Though it's worth noting there have been some recent insider stock sales reported.
Okay, so despite all this optimism and these really ambitious plans, what are the remaining challenges and risks PayPal needs to navigate? It's important to, bring the listener back to reality for a moment.
Absolutely. You always need to consider the risks. And the company itself highlighted several key ones in their call. There's some sign of a slight softening in U.S. retail spending, which could impact volume. The overall macroeconomic environment remains, well, uneven, creating uncertainty.
Makes sense.
They're also facing, and this is constant, intensifying competition across the digital payments space. Currency fluctuations are always a risk that could impact international revenue. And they continue to incur ongoing restructuring costs. It was about $92 million in Q2 alone related to their big tech transformation efforts.
Right, those investments cost money up front.
Exactly. And finally, they did see an increase in transaction losses. They attributed this to a normalization of loss rates, maybe post-pandemic lows, and also related to new product introductions. These are all factors that could definitely influence their path forward, even if they execute their strategy perfectly.
What a deep dive. It's really clear that despite that mixed, maybe even puzzling, market reaction to its latest earnings, PayPal has demonstrated solid, profitable growth.
Definitely.
And they're making pretty significant strides in this strategic transformation they've laid out. They're really focusing on branded experiences, buy now, pay later, Venmo's evolution into a full-blown commerce platform, global interoperability with PayPal World, and investing heavily in those next-gen commerce solutions like AI, ads, and crypto.
The company is clearly executing a comprehensive strategy. They're trying to redefine their role in the future of commerce, aiming to move beyond maybe its traditional perception as just the button on the internet.
Right. So here's a final thought for you to chew on. Given PayPal's ambitious plans to connect billions of users globally and lead the charge in agentic AI and crypto payments, do you see this as the start of a new, transformative chapter for the company? Or perhaps are the macroeconomic headwinds and those competitive pressures just too significant to overcome? And maybe, on a personal level, how might these shifts impact your own digital transactions and financial habits in the years to come?